Love on me, 'cause I won't let you down. Traders, happy Friday night. It's time to have a Wall Street after hours day trading party. You like the name of that? Wall Street after hours. Sounds like something that might catch on. All right, tonight I want to go over some very important things in regards to our trading accounts, especially to start the coming week. A lot of you actually just funded your trading accounts, and so I want to make sure that you guys are well prepared. First of all, I want to discuss, before we dive in, you guys throw out questions if you want to, but I want to discuss some non-sexy topics real quick. Just risk, for instance. For example, there's a huge psychological big gap, between assuming you're a risk taker because you put on trades and then fully accepting the risks inherent in each trade. When you fully accept the risk, it will have a profound implication on your bottom line performance. Here's one thing that sticks out to me very well. Consistent losers do almost anything to avoid accepting the reality that no matter how good a trade looks, it could lose. It could lose. So, with that being said, I mean, let's take a look. There's been many times where I have lost way more in proportion to my account than I should, because I put too much emphasis on one individual trade versus the entirety, the series of the trades. I don't even know if this ticker is still around, NCTY. I actually do remember this one. Wow. NCTY is one I blew up on like 6 or 7 years ago. I don't even know if I can go back that far. Add a time frame, 20 years. All right, the 20-year time frame. Let's pull it up. Whoa, way back when. So I remember with that individual ticker, it was interesting. There was an inverse head and shoulders, but the ticker was already up. Man, it's just unbelievable, like how you start trading differently as the years progress. Unbelievable. Like looking back and knowing what I did, I feel like such an idiot. And so many of us do the same thing, right? Especially earlier on in our trading journeys. And then in hindsight, looking back, if you're still in the game later, you realize that was a pretty dumb trade. What was I thinking? Taking that trade. Problem was I probably wasn't thinking. In fact, I was probably gambling with that. So yeah, that was certainly a gamble. I did what I see a lot of newer traders do, in that they over leverage on one individual trade versus thinking in probabilities. Thinking in probability is a big problem that a lot of traders don't do. It's not a right or wrong error. Let that stick. We go over a process versus results-oriented trading all the time. It is not a right or wrong error. It's is thinking in probabilities. And one important thing that will have major implications on your account is starting to think in terms of probabilities and trying to gather evidence as to why a trade may or may not work out. Now, you don't want to talk yourself out of the trade. You don't want to turn into an analyst. But what you do want to do is gather evidence as to why this trade perhaps may not work out. Not a popular conversation, right? But for those OGs in here that want to be successful at their trading, that's what they're going to do. They're going to gather the evidence, because what did I say? There's like several rules. I need to come up with the 10 commandments essentially of trading for the newer traders out there that they try to abide by. They're kind of universal. Again, I don't tell people how to trade, but there are certain guidelines that you should focus on with your trading, because for one, there's something very important here. To operate effectively in the trading environment, we need rules and boundaries to guide our behavior. Remember, it's a limitless market. Market can do whatever it wants to. There's no guarantees there. There's no certainties. You're trading in probabilities. So what do we do? Number one is you're going to take your edge, take the approach. So we're going to review kind of my trades since January 1st and go over the higher probabilities setups I've taken, the less probability, the bad trades, the good trades. What's the overall approach with my trading? We're going to take a look at everything, because there's been some good, bad, and ugly. And I want you guys to learn from it. But you obviously want to gather evidence. This is where a lot of traders, they don't do this. You want to gather evidence as to why it may not work out. Now, you don't want to become an analyst and have paralysis by analysis. That's a deer in headlights in one regard, right? A lot of traders experience the deer in headlights buying the breakout, but this is another way of experiencing deer in headlights and convincing yourself not to take a trade. It's hard. The dichotomy of that is very difficult. I understand. It's very difficult. You're gathering evidence as to why should I not take this trade? You know how I say in the mornings, let the trades come to you rather than you finding the trades? This is what I'm talking about. As in, wait, be patient. Spell patience with a P-A-Y. Because patience pays. Warren Buffett, in fact, said that. The stock market is a device from transferring money from the impatient to the patient. There's a lot of wisdom in that. So you got to gather evidence as to why it may not work. Don't talk yourself out of it. You got to be confident in the face of adversity. Confident in the face of adversity. It's a strange thing, right? Remaining disciplined, focused, and confident. Those are the three things I always talk about: discipline, focus, and confidence. And then 2. So you want to do that. What I said, you want to figure out, talk yourself out of it. Why may this trade not work out? Talk yourself out of the trade. You want to let the trades pretty much drag you into them. As in, I don't want to take this trade, but it's turning into such a good setup that I have to press the button. Which is what? A defined edge. You know what the edge is? So the signal is saying, take the trade. There's a good signal, take the trade. It may or may not work, but you need to take it. You don't want to... There's something important I want to point out here. That today we actually, in fact, we pointed out too. If you can learn to trust yourself with your trading account, the sky's the limit. Your equity curve is going to look way different than if you can't trust yourself. Meaning, if you're buying the lowest float ticker, buying high and hoping higher, and not really a defined risk set, I don't know if you're going to be able to trust yourself. Because, again, we talk about this all the time. Longs take the stairs up, shorts take the elevator down. There are trading edges that, in fact, they do, they buy dips and sell rips. I get that. But as far as what? When a ticker is up, like we saw today, for instance, the leading gapper this morning, which we can take a look at real quick, was OMEX. OMEX, and I was actually looking for OMEX today to pull back down towards 120. I literally said 120 is kind of the area I want. Now, I don't like to hold things into after hours pre-market, so I kind of avoid that. And that's why I went over, so from Mark Douglas's book here, how you have to have boundaries to guide your behavior. You have to. It's not a sexy topic, but you have to have rules and boundaries to guide your behavior. It's a simple fact of trading. There is a potential to do enormous damage to ourselves that can be way out of proportion to what we may think is possible. So keep that in mind. And if you haven't experienced that pain, you will eventually. So I had a 175 short here. And covered leftovers at 135. 120 is an area I was looking for. But OMEX, where was it? Well, you guys got me on a tangent. What was I talking about here? I was talking about a ticker that, I was talking about some traders buy the dip, sell the rip. Well, when a ticker is up, this is one of the things I notice with newer traders a lot. They'll see the hoe that's up in the morning and they can't take their eyes off of it and they have to trade it essentially on the long side. They see it up, they buy high and hope higher. MG, I wish I would have smashed OMEX today. I mean, it was my bigger trade with leftovers, was up plus 30 on it. Here's the P&L today. I'm happy overall with the P&L. There's no complaints. Kayvon's in here. What's going on, Kayvon? No complaints with today. I would just prefer, and I'm hoping and praying and fingers crossed, we get to a day where, I'm able to, most everything's green and the leftovers are all green as well, but I'm very happy with today. Took a lot of small L's, and then my two winners, I let leftovers work and maximize those trades. So it was pretty much a bread and butter day. This is how I want the days to look. Clearly, I want to add a 0 to all these orders. I'm getting a little irritated there. I'm going to see next week if I can kind of have a week like this. That will be very helpful. I'm going to show you guys in a little bit the trading performance on my account since the beginning of the year. But I wanted to go over OMEX. So, yeah, the buy the rip and sell the rip. A lot of traders do. But buy the dip and sell the rip as well is some traders what they focus on their strategy. I'm not saying there's not some profit in that. But what I am saying is over time, you're going to see things a little differently. You're going to see a ticker that's up from 40 cents to $1.80, and rather than experiencing the fear of missing out, you're going to understand what your emotions are telling you, and you're going to respond to them accordingly. So not to say that my emotions aren't telling me, and I say that all the time. You never make it, you're always making it. The emotions are a strange thing. The emotions don't necessarily go away. You get a cardio workout essentially every single day. I've been wanting to run on the treadmill the last few mornings, but I haven't really had the time with the kids. And then I think to myself too, I'm like, well, I'm trading today, so I'm going to get a good cardio workout anyways. The heart's going to be beating. We're going to be getting a nice little workout. I don't know if that's how that works. I have to ask my doctor, but it's a good cardio workout, right? You guys get it. But what I am saying is we got to focus on objectivity. Objectivity, impartiality, many different ways of saying that, saying the same thing, right? We got to not, and additionally, because I struggle with this too, and I know a lot of newer traders struggle with this, where you tunnel in and you actually do show partiality on one ticker alone, because you are going to be trading that one ticker and oversizing it. I say oversizing on one ticker creates an over emotions. Larger the size, the larger the bias is something I like to say. Larger size, equals larger bias, Random trading equals random results. I mean, my mind's full of these little quotes that you guys can write down. We want to eliminate the bias. And how do we do that? Well, I recognize that I do have a bias, especially with some of these tickers that I love. I love some of these tickers, and I'm like, man, I realize that poses a problem when you fall in love with something. You see something that it's a pocket pair ace hand, but again, the pocket pair ace hand does not always work out. So I see it, we're shooting straight up, euphoric move into maybe a descending triangle. We're tapping the 200-day moving average. Like all the stars are lining, indicators are lining up. And that's when it becomes a little dangerous, right? Because then you get a little, you don't see necessarily the risk anymore. And that's something I just went over with you guys. When you stop seeing the risk, that's going to be challenging for the account. You got to fully accept the risk. Otherwise, the bottom line performance is going to be rough. It's going to be rough. And you can't operate under the assumption that more indicators, like I just said, the stars are aligning. You cannot operate under the assumption that all of these indicators and stars lining up is eliminating the risk. Not a sexy topic. Don't know why anybody's watching. Because I don't talk sexiness. I talk the truth. You're never going to have a guarantee. You're never going to have a certainty in the market. You're just going to have probabilities. That's all you're going to have. All you're going to have is probabilities. MG, the entrance you done with OMEX and CSIQ today were great. I wish I could have taken it with you, but family came to visit today. Hey, hanging out with the family. It's all good, man. Yeah, CSIQ, well, the first trade was bad. Second good. I think I wonder if I even made money on it. I lost 10, then made 17, so not much. But yeah, thank you. I'm happy with the single entries and how I'm doing those. I am very happy with the single entries. Now I want to dive into the trading performance on my account because of that. This is really cool. MG, are you over at CPro? You can do the same thing. Log into your Pro Reports form, and then with the reports, click Trade Performance, type in your dates. And this actually gives you some detailed analysis. I like this a lot. So my win-loss ratio, these are the wins. Win column, loss column, total column. My wins, I have 157 wins, 208 losses. So I did the percentage on that. Not entirely great. In times past, I have had 75+% win rate, but I was trading a lot differently. As in I was taking multiple entries, not just one. Right now, I'm focusing on one good entry. Back then, I would hit it short, or hit it long. Add. And again, that's going to bring your consistency up, but you're going to have that one outlier trade on the week, month, or quarter that's going to be the outlier and kind of wipe out everything. So you have this, MG. Yeah, this is cool, MG. I've never looked at the trade performance. I've just looked at the totals by date or detailed. But the trade performance is interesting. It actually, so I can see I got 45% win rate or 55% losing rate. But my winning average right here is $21.11 with the average winner. And then the average loser is $15.33. My average hold time for the winner is 1 hour and 4 minutes. Average hold time for a loser, 36 minutes. And I'm actually fairly satisfied with those numbers. Of course, I need... look, that's not terrible. That's not terrible. I need the win rate maybe up a little bit. I'm very happy to keep the losers low. Kayvon and I were talking about the other night. I did take 3 or 4 big L's that hurt the account. So about $300 to $400 of the L's on the account were just at the outliers, essentially. I wasn't inherently focused on the risk. So this week on Tuesday, I broke a ton of rules and hit max loss, big max loss, 3x max loss on Tuesday. That crushed me this week, guys. Broke a lot of rules. I am capable of doing that like the next person, and so that's what's kept this probably the losing average where it's at. Otherwise, it would probably be 10 or less. Yeah, I took like a 135 or 40 loss on one ticker. I married it. And so that's why I typically and teach you guys this as well, because I want you guys to learn, because I'm from the South. I want you guys to learn from my mistakes. I don't want you to do that. I want you to really not marry any tickers. I have to go over that nearly every single morning. You can, MG. Yeah, you can get the same report. It's awesome. Take a look at it, man. Tonight, trade performance, and you can look, January 1st, and I can see exactly what pretty much my win percentage is, and my average winner, average loser. It's great. I love this. So what's the total? So total, I'm up $125 since the start of the year, and I have a ton of fees. Nearly 400. But it's all good. I'm not too dissatisfied in my trading. The first few months I was trading sideways. You guys can see that because there were no fees. And then the fees kicked in, and I need to kick in the profits a little bit more. I've been holding them fairly well. I'm happy with that. I think I need to size into some winners. Like OMEX today, maybe. I said I wasn't going to do that because I was on leftovers. So I was trying to be disciplined there. But I think that could help out the account, sizing into some of the winners. I haven't been doing that very often. But otherwise, with being red on fees, I'm not too dissatisfied with all that currently. There's just a few things I got to tweak. Definitely got to tweak. But I'm trusting myself. That's the main thing I want you guys to gather. You got to get to the place where you can trust yourself with your account. You got to trust yourself to do what's in the best interest of your trading account. So making sure you're taking the L's when they present themselves and not fighting tickers that are not working out. And that's why what I've been doing a lot of times, what was my L today? Like the first one. ACHR, which I took an L on yesterday, 2 L's on yesterday and today. So ACHR, SOB, top down. I literally just topped out that at 874 too, didn't I? 875, I stopped out of that, buy to cover, and I literally did that right here, 875. All right, yeah. So stopped out at ACHR fine today. Been stopping out well. I place my stops right when I get into the trade, and I move on to the next one. Guys, it's just that's just what's been helping me. I don't know if that's what works across the board for everybody, but I know myself and I know my limitations, and my limitations are I'm going to place an insubordinate amount of significance on the up and down ticks on one ticker when I'm involved with it. I stare at it too much. Place the stop and move on, Kevin. That's the idea. I'm getting in on the signal. I see the risk, then place the stop and move on. Why do I need to stare at every up and down tick with it? It's creating too much noise, too much emotion. So I've been happy with that. 2 winners I did, 17 and 30, so 47, and then smaller losers. I'm happy with. Ultimately, I'm happy with. I've been letting the leftovers work pretty well, and I am trusting myself. Yesterday, guys, I took like 7 L's in a row. What I should have done was just, looking back, I could feel that the day was difficult. I should have stopped the day a little early. But when you have nothing working out, you should probably just end the day, right? End the day. Rather than, how I've said that, how you can dig yourself in a hole. Rather than continuously digging yourself in a hole, just throw the shovel down and jump out of the hole. You're gonna have red trades, you're gonna have red days, but you don't have to have large red trades or large red days. That's the difference. You do not have to have large red days or large red trades. So try to mitigate it as much as possible. I have with putting the $50 max loss on the account. Additionally, been sticking to the rules. I'm fairly happy with the day. Even yesterday, pretty happy with it. I mean, I took L after L after L. I top ticked 3 of them. That I was frustrated with, but I respected the risk. I adhered to all my rules, so ended up being happy with it. But when you take all those L's on a small account, it's difficult. If you have a $10,000 account, take L's all day. It's not that big of a deal. If you're down a little bit, but when your back's against the wall already, it kind of hurts. Kind of hurts. All right, so there were a few decent plays today, and what did the SPY end up doing? SPY closed at the highs. Man, this AMBP hit 380, pulled right back. Pony sold off all day. My God. OLB today was pretty good. Double topping around 205. Some decent plays, guys, especially to keep on watch for Monday. OMEX, just amazing. Loved that play. Love that play just because it's one of those plays that you see all the time where ticker's up 40 cents to $1.80 and longs are buying the FOMO on up, fear of missing out, and you're taking the opposite end of the move. Now, you guys saw the win rate. It's not, I am green, since the beginning of the year, but the win rate's lower. And why is that? Well, when you're a contrarian trader or a mean diversion trader, taking the unpopular side of the trade, let's just put it that way, oftentimes you're going to start the trade red. Now, why is that? Well, because you're literally shorting into the liquidity of it while it's going up, while people are FOMOing into it. So naturally, you're going to be initially red. I'm probably like 100% of the time or nearly that, red initially upon entering a trade because you're taking the unpopular side of it. You got to be comfortable taking the uncomfortable side of the trade. If there's any tickers you guys want me to pull up, let me know. But there's a lot to trading, guys. You have to have an edge, not just for getting in. Entry is a very small part of it. Oh my God, it's such a small part. You got to have an edge for getting out too. Not just an edge for getting in, edge for getting out. I've been trying to, because I am taking the opposite side of the move, what I'll do is I'll get in like a smaller position size and widen out the risk a little bit. I've been doing that a little bit more, and it's been working out. Again, yesterday I did stop out 3 times, and that tremendously sucked. But ultimately, been giving them a little bit more room, taking the opposite side. But like I've said, I don't want to eat like a bird and shit like a rhino. It's not a good approach. Not a good approach. So when you can start trusting yourself to not do that, that's what's going to have major impact on your bottom line performance. But additionally, like thinking about one thing that's been helping me out here recently too, Like I said, and I mentioned this earlier, is just focusing on something else. Like I'll get involved with a trade like this OMEX, but I realize when my attention's getting a little too heavy on this ticker, when it's not healthy for my account, for instance. Like I want to take the signal, but I don't want to marry it. So I take the trade, but rather than marrying it, I'm like, okay, let's take a look at something else. I'll take the trade, set the stop, but I don't want to marry it. It's not good. I mean, look, I'm speaking for my account and what works for me. I'm not saying works across the board, but what works with me is let me take the trade, and I know it's unhealthy if I sit here and stare at every up and down tick. So what I'm going to do is take the short OMEX at 175, and rather than sit there and stare at it, I'm going to find another signal and throw some chips on the table with another signal. I don't want to go all in, all chips on the table with one trade, no matter how good it looks, because look what Mr. Douglas said down here. In trading, no one except yourself is going to force you to decide in advance what the risk is. In fact, what we have is a limitless environment. Virtually anything can happen. Here's what's important to note. Consistent losers do almost anything to avoid accepting the reality that no matter how good a trade looks, it could lose. So that's what I've been trying to practice. No matter how good something looks, I'm going to avoid trading it. Or avoid sizing into it, rather. Because sizing in is going to create additional bias. I want to have like a certain size that's pretty consistent. You guys know I'm about consistency with sizing, because consistent sizing across multiple tickers is going to equal consistent results. But if you see, and I understand some hands deserve a little bit more risk, that may be better hands, but it's inevitably going to create a larger bias, and so I'm trying to avoid that no matter how good the hand looks. I liked OMEX today, but I didn't want to tunnel in, so I took the short. I'm like, look, I like this. I'm going to set the risk and move on to something else. And then at that point, what do we move on to? I didn't trade much else for a while. ACHR took a L there. ARAB, man, ARAB I was up good too. Didn't lock any in. It is what it is. I'm getting in the habit of not complaining when I am holding them longer and trying to let them work. Because yeah, sometimes it doesn't work out. A lot of the times I do take half off and let leftovers work. Like these last four down here. Even though these two beta covers were roughly the same, because that one ended up curling back around. But OMEX 157 cover and then 133 cover, that's pretty good. When leftovers work, it works out pretty well. So I try not to cry over spilled milk if I'm really holding a winner, because I know that over time that is going to reward me. Some trades that may not work out, but we're trading the probabilities. Yep, so trading the probabilities. That's what we want to focus on, guys. I took way too... And I reiterate that so much because I took, with this small account, I've taken several way bigger L's than I should have, oversizing into a couple trades. And I'm showing you guys my whole report here from CPRO. I said I'm going to be vulnerable with this. To me, I want to help you guys out. That's my mission here. Obviously, I gotta focus on being green and being profitable. That's what I'm trying to do. But I'm gonna keep going with these small accounts till it's working out. So I'm not worried about that. I'm gonna be consistent with it. It's just a matter of tweaking a few things that I need to do. But I want you guys to learn from this. Gross here, totals, green on the trades, Red on the fees. And that's not what I necessarily expected. Not necessarily what I expected going into this small account, I'll be honest. I knew the SMEs, I knew the fees were going to be really small going into this, but I did not expect to be eaten up with them. So that's one thing I've been scratching my head over, let's put it that way. I'm trying to figure out how to overcome this. Mr. Bad in the building, hanging out with the green team, Wall Street After Hours. How you doing? And MG, the reason I don't trade pre-market or after hours, that's just when all the news comes out, and I really want to. So after hours, a lot of the offerings come out. Pre-market, a lot of news comes out, like 8:30, 9, and that's just a variable that I'm trying to avoid with risk management, and that's all. I try to focus on predictability, and the pre-market after hours involves a level of unpredictability to me. But I am happy overall with the gross. Average winner 21 and average loser 15. I'm happy with that. The 3 or 4 big L's are killing me on the account, but I'm happy with the fact that Tuesday that happened, and I feel very confident that I'm not going to let that happen again. Will it? Maybe. I don't want to allow room for that emotionally. I really am going to try my best. It's a conditioning of the mind every single morning to say, Kevin, you're not marrying anything. Take the trade, set the stop, don't marry it, move on, no matter how much you like it, no matter how good the indicators are. Just avoid marrying the ticker. Because that has bit me in the booty more times than I'd like to admit. So I've blown up accounts doing that, guys. It's awful. It's something that's difficult for me. So that's why these days with my trading, I'll take the edge, take the signal, set the stop, and move on to the next trade. And I try hard not to focus too much on my trades. That's why I like to work 3, 4, 5 at a time, because it helps me to see things a little bit more objectively. I hope that's making sense to you guys. Helps me see things more objectively, just to say, hey, I'm getting into this trade. It is a great setup. This is essentially like, this setup, is essentially, I got 2 face cards at the blackjack table. It's a good hand. I'm winning this the majority of the time. But do I want to be like all in? Maybe think poker analogy like the pocket pair of aces, because you can kind of bet after the fact. Do I want to go all in pocket pair of aces? There's an argument where maybe you should. But it's not. What I'm saying is there's not a guarantee it's going to win every single time, and that's what I've experienced where I've done that. I've done that several times and trying very hard to avoid it. Bad, not red on a Friday. Can eat your meals with peace. I get that. Yeah. That when you end the week on a green note, the weekend's a lot sweeter. It's a lot different. Kayvon knows all about it too. Nothing worse than a red Friday, especially if you break the rules and everything's bad. You break the rules. You have a max loss red day. Nothing worse than a red Friday. And the Fridays come so quickly. Kayvon and I were just doing our interview last Friday. I've said it before. I mean, when trading, I just feel like I'm going to age way quicker trading. And time just flies. I have way too much fun with you guys. Way too much fun. That's something, side note, sidebar, throw this in there for free. I've heard many people, this is just a psychological thing. I'm on this like psychological journey with trading. But for those that are trying to trade to get rich quick, or trading because they don't really love it, I'm trying to think of a more profound way to say it, but I'm no Socrates. It's going to be an even more difficult uphill challenge. What I've noticed in the journey has been those that are going to trade regardless if they're making money or losing money, or they're in it, they're just in it for the journey. They're in it because they love it. If you love trading, you have a future with it. If you are trying to do it to get rich, it ain't going to work out. But that goes for many things in life. You know, that goes for many different career paths and whatnot. There's been so many, like, I mean, I can even relate it to the guy, Mr. Beast. Like, he I saw this little clip of him. He said somebody offered him like billions of dollars to buy out his company, and he was like, well, why would I accept that? Because I'm not doing this for the money. Like, even if I accepted that, what would I do? I'm doing exactly what I want to do. I'm going to do this regardless if I have the money or don't have the money. Yeah, Kayvon. That is exactly right. Having a manageable red day doesn't really affect the mood at all. Yesterday, I was red on everything. The top ticks annoyed me, but I still trusted myself at the end of the day. I think that's what I'm ultimately happy with. Still, if you can trust yourself with the account and you know you're trying to let the winners work for you and you're cutting your losers well, managing the risk, yeah, it is the days. It's the days you screw up. And really, if you screw up and you're still very green, those are dangerous days too, you know? Like, if you screw up on a trade, but you're very green on it, that may not be helpful for you, because you're going to learn some wrong lessons and then you're going to screw up even more. Like, as in the add into eternity kind of thing. I will beat this thing into submission. It's going to work eventually. Oh, I tried that approach. It just doesn't work for me. It doesn't work, guys. I can't do it. It doesn't work for me, at least. Very high consistency rate, but the outlier screwed me up way more times than not. But yeah, guys, I wanted this to be a little helpful Friday night video for you and hanging out with you guys. Wall Street, after hours, Friday night. After probably a red week here, it definitely probably was a red week here after Tuesday breaking all my damn rules, but other than that, I'm pretty satisfied, I guess, with the week. Kayvon, your BNTX long with that quick pop. Oh my god. I couldn't believe that when you sent it to me. Yeah, you hit that long and then took it all up there at 100. Nearly got the top tick on that. And then she had that natural curl back around like you said, yeah. Yeah, that was a good trade. Man, there were so many, like... I'll flip through some tickers. There were a lot of decent... A lot as in like 4 or 5 really decent setups today. Every single day we've been... Like, we're always on the top setups. There's usually at least 3, 4, 5 that are pretty good setups. A matter of if I take them or not. Then if the entries are good, stops are good. Entries, that's just a very small part of it. Very small part. The exits, and that's something I didn't realize for way too long, guys. Like, so many of these things are very aggravating now. In hindsight, looking back at how I used to trade and how dumb it was, how dumb I was way back when, and thinking I knew everything. So then the longer you trade, and then you see some of these other guys they think they know everything, you know? You kind of look at them in a funny way. You're like, whoa, you got quite the ego there. The market's got some humbling to do with you, because the market is going to humble you. If you stick around here, you want to be a trader, you're going to be humbled many times. And if you don't like being humbled, you're going to get out of it real quick and go find something else. You're going to go find something else to do, because the market will absolutely crush your ego. The ego does not know how to trade, guys. It really doesn't. I've tried it. I can attest. The ego, not so much. You gotta be humble. You gotta approach the market in a humble manner. Well, each trade, really. Each trade in a humble way, saying, I don't know what's necessarily going to happen on this particular trade. It is a good setup, and there is a high risk reward here. I don't necessarily know what's going to happen, though. And trade understanding that. Not necessarily talking yourself out of the trade, but trying to find reasons as to why this trade may actually not work. This trade may not work. Let's find reasons as to why it may not. Detaching yourself from the outcome. Yeah, only as good as your last trade. If the last trade you blew up, that's how good you are. And then taking full responsibility too. That's a big thing. See a lot of traders blame. We see this a lot. We see traders blaming the market, blaming manipulation, blaming chat rooms, blaming everything, the broker, everything they'll try to come up with just to not blame themselves. Traders do not want to accept responsibility. It's an ego problem. It's an ego problem, not accepting their responsibility, and then you inherently don't accept. Not accepting that responsibility, you're not going to learn from it at all. Period. MAGA Musketeer, PW 2.0. Yeah. Patrick Whelan and I, we used to hang out a few years ago. He went the futures route. I've always kind of stayed equities, so equities is my thing. Yeah, you gotta accept responsibility, because if you do not, it ain't gonna go well. It's gonna have bad implications on the account. You're not gonna learn, for one. You gotta say, why did I lose on this trade? Well, maybe I bought at the top. Yeah, MAGA Musketeer. We did a few videos together way back when. I could probably find it. It was called Beginner Day Trader. Patrick Whelan, Kevin Avery. Yeah, here it is. There you go. Dude, this is so old. agree. It's too long. I can't even put it in here. Yeah, just type in beginner day trader. Patrick Whelan, Kevin Avery. And you shall find it. Man, that was like 5 or 6 years ago. That was like right when I was getting into shorting too. I was getting heavily into shorting, transitioning from the long to the short bias trader. The long journey was tough. It was a tough journey. Shorting, a little easier. Shorting's just easier because you're reacting. I don't know. You're just reacting to the move. You're not trying to predict volume. I like that you just show up late. Really. You show up late to the party. Like this OMEX today that I got that short on. You're showing up late. I mean, the thing's already made its move. 40 cents up to $1.80. I took a $1.75 short. You know, I'm there kind of late to the party. You can show up late. Sleep in. Get there after the party started. Oh, don't even, Kayvon. That's not something I'm proud of. The CEP trade. I can't tell if you're being serious or not. Yeah, I mean, I could see it too. I think the reason I even took part in it with such small share size is the fact that yesterday, I literally called it in pre-market. I'm like, CEP is probably going to get the spike today, and then it did 18 to 39, spiked $20. So then today I was thinking, well, I could see CEP making another move today. Why don't I actually take part in it instead of just calling it? But of course, long, I'm going to take a smaller share size, especially a ticker being up a few dollars to 30. It's going to be tight risk. I ain't risking a lot. And, it took like 3 points there, I think. But, yeah, it's not. Those kind of trades, those yellow trades, the risk is going to be very tight. Very, very tight. But yeah, longs as far as those go, I mean, you got to be early. I like to show up late and just take the short of it. Find the top. I got the resistance already marked off on so many of these. Like CSIQ today, here's my resistance line. Marked it off 1130. Took the short up here. Wrote it back down to the bottom support line here. 1060s. Just easier in my opinion. A little easier to see it. But I know for newer traders, shorting's a little daunting. A little scary. There can be apprehensions to do it because you're like, a lot of newer traders are saying, man, you can lose an infinite amount of money on this. So, and I have heard these horror stories, and they're not pretty. Guys, I've been around the block a little bit. I've seen people lose so much money live too. I've seen people lose whole freaking cars, $40,000 worth live. It's going all in. That's why I try to teach you guys. Don't marry and go all in on one ticker. You're in the right place, man. I'm gonna tell you guys. This is Avery Day Trading 2.0. I'm doing this with full integrity. I want you guys to know what not to do. Once you know what not to do, you kind of learn what to do. Right? You learn what to do. My little analogy that I always like to say is, I got a couple of them. For one is the Edison one I always go over. Edison with the light bulb. He didn't fail 1,000 times. He discovered 1,000 ways not to make the light bulb. So there's one of them. So with your trading account, that's essentially what you have to do. Discover all the ways in which you should not be doing things to figure out the ways in which you should. All right, so I need some opinions on this. I need y'all's help. I need y'all's help. Kayvon, what you think? What you think? Just keep doing what I'm doing? Been getting a little bit more with the start of the small account. I wasn't going for much. I've been getting a little bit sizier, a little bit. I mean, I'm going for bigger days. The average winner's 21, average loser's 15. I'm up 125, but down 379 on fees. So I got to figure out what to do here. Something's gotta change with regard to those fees. Like, is it over trading? This is what I've been scratching my head over. Is it over trading? I don't know. I mean, if I overtrade, it's very minimally. I mean, I just don't do that much. B, do I need to size up a little bit? And C, maybe I just do what I'm doing, but I don't take those big 3 L's like I took. I've taken several really bad outlier L's. So maybe we just do what we're doing, but we just avoid those big L's. I don't know. There's a few things I'm bouncing my head around right now. Few things as far as this account goes. I'm trying to bounce some, get some ideas going. That's what I'm trying to get. I'm feeling good with the account. I've taken a few big L's that may be what's killing me here. But just being red on fees is really aggravating. I gotta figure like that shouldn't be a thing. It's like that this gross amount should be an extra 0 right there. This should be like $12.50. So that's what I'm trying to figure out right now. Feeling good with the account, trusting myself, but trying to figure out what I need to do to not be red via fees. That's not what I thought would be the case with this account. I'm glad I'm still in the game and surviving. Over 4 months later, I didn't think my redness would come due to fees, especially because they're the lowest they've essentially ever been. The fees, I mean, I don't know, dude. When I first started, it was like $20 round trip, and then CMEG when I first went over there, Trinidad, it was like $2.95 a trade, so it was roughly like $6 round trip, and now it's not much at all. I mean, it's really little. Kayvon, you think it's a little bit of everything, no big losers. Try to get the win rate up a little bit in less trades. So all the above, really. Yeah. Yeah, I think so. I think the win rate, I have topped a lot that would have changed the account. Like, there's a couple really unlucky situations that have happened. Like, I've topped a lot that would have been massive trades, and I did take a few way bigger L's than I should have. So there's a lot of things that shouldn't have happened that happened. But so maybe we do that. We keep on the road we're going on, but we avoid all the big losers. Try to get the win rate up a little bit. I could be a free broker and be green without the commissions. Yeah. I've been happy with C Pro, but I have been happy with them. There's the shorts. The shorts, I want to pay the $400 in fees over a few months, and that'd be fine. That'd be fine. Not too worried about it. But that's going to require the win rate up a little bit and sizing up a bit. Like the OMEX trade today, made $30 on it, 175. I want to get to the point where and I know it's just the progression with the account, but I definitely would. The sizing is aggravating me a bit. I don't feel like with a small account I can hit it with 500 shares. That's oversizing on it, But I do want to hit it with 500. But I need to grow the account to start sizing up a bit. Once you get consistency, then you just throw zeros on the end of your order. You start making more money. I'm very focused on not oversizing on anything. MG, thanks, man. I appreciate that. Yeah, the fees started working the account. Yeah. And I'm just starting to wonder if this is too small of an account, which I know a lot of traders are funding like 1,000 and less. So I want to make it possible. I want to pave the path forward, but it is not easy with the fees. I mean, clearly if I could go back, like looking back when I was under the promotion, I gave somebody this advice today who just went over to C-Pro, who has the promotion applied. I'm like, dude, and I didn't locate anything, and I would have got all that rebated back. Like trade the hell out of some tickers. Take the signals, essentially. I mean, don't over trade, but dude, you don't have any fees or commissions, so be aggressive. Because one of my new rules ever since the fees started applying is be aggressive. Be more aggressive with the green days, really. For a couple months there, I was very aggressive with the red days, trying to dig myself out of red holes, in which I found myself successful in doing it a lot of the times, but then I took some big L's and had to apply the max loss on the account. So we've been tweaking a lot of rules. I'm happy overall. This is the performance since January 1st. For you guys to see. Very vulnerable, open about all this. Yeah. I'm not dissatisfied, just a little surprised, I guess. I'm red via fees, that's all. Up 125, red on fees, 379. All right, the best loser wins in the building. Anyone else try to pick the top? We're always trying to pick the top up in here. That's what we do on the short side. Always picking the top up in here. This is the top squad. You're talking to the top squad. We're always short in the top. Yeah, we're always looking for the top, man. Best loser wins. Are you you're a short trader too? Yeah, Musketeer. Yeah, the commissions are reasonable. They are reasonable. That's not bad. The 379 is not bad, considering it's been 4 months. Yeah, it's not bad. Yeah, I'm just banging my head on. I want to see things clearly, Musketeer. Like, I don't want to be ignorant of mistakes that I'm making. So, I'm trying to look back and think, what could I have done better? What am I doing now that can improve? Yada, yada, That's what I'm looking at right now. I'm trying to figure it out objectively without being impartial at all. And being an open book to you guys. So you're going to see, I said at the beginning of the challenge, you guys are going to see me blow up or grow this. Or whatever happens in between. You're going to see me blow it up or grow it. I don't care what. I'm going to try my best, and I'm going to help you guys out along the way. That's the whole point of it. Yeah, it's not bad. It's not bad. Well, I mean, a few of those big L's that I took, I'd be pretty good right now if I wouldn't have taken them. So I kind of contribute that to I did break rules with a few trades that effed me up. I mean, today was a really small day, and it's a little aggravating, but this is essentially what I'm wanting every day, and I went over this with you guys. I want to trade over I want to focus on the series of trades. I don't want to focus on an individual trade-by-trade basis. I don't care about home run trades. I don't care. If somebody posts a huge home run trade, it doesn't impress me at all. What I'm focused on is if I have 100 trades, I'm consistently profitable over them. I'm not taking massive L's and it's randomness. I'm not interested in randomness. I want consistency. So we know we're going to have red trades. What we want to avoid are large red trades. We don't have to take large red trades. We don't have to have large red days. What I'm impressed by is consistency over time, over the series and sum of trades, not focused on an individual trade-by-trade basis. So today, took a few L's and let a couple winners run. As you can see from the since January 1st, my average, the winners, I'm holding an hour. The losers, I'm only holding 36 minutes. I am happy about that. There are certain things I am happy about, certain things I'm not happy about. Let's put it that way. Best loser wins. Out of here. Good night, gentlemen. Yep. Hey, jump in the live stream Monday morning. We will be here trading live. Kayvon. Come to the large caps. Dude, the elevator down moves happen very often on those small caps, very often, and that's where I find a lot more of the inefficiencies in the market, which is kind of what I'm looking for, right? But yeah, I'll trade anything. It doesn't have to be small, large. It can be medium. It can be extra large. But yeah, these inefficiencies are all I'm looking for. MG, you could be the only trader on the earth who hasn't blown up $1,000 in 5 months. Yeah. Potentially. I mean, I have high expectations for myself, so I want to look at it a little differently. I want to have triple, quadrupled it at this point. I want the equity curve to at least be going in the right direction. I think we got it, guys. I do think we have it. I'm pretty confident. But we're not going to trade with our ego. We're going to trade disciplined, but we got to trust our system, and we got to take the edges as we see them. Take the edges as you see them. Trust your system. Trust your edge. But be disciplined enough to set the stops, move on. The one thing I told you guys that helps me out a lot is taking the trade, but moving on. I'm not going to marry it. Going to take the trade. Going to take the pocket pair ace trade. And moving on. Setting the stop. And then looking at something else. I'm telling you guys, that alone has helped me out so much. Just getting involved and not even looking at it anymore. Because I start God, that HTZ trade. Ugh, I wish I could control Z that trade on Tuesday. Man, this trade irritates me on Tuesday. Yeah, this one right here. Took the short, got stopped out up near the top, and oversized on it, broke rules, adjusted my stop, married it, yada yada. It was awful. Next week we'll treat you right. 20 to 50 days with no big red. I think so. You're right. Like 20 to 50 days if I don't, because let's be honest, 20 trading days is all there is in a month, right? So the last about 50 trading days, I definitely have had probably 3. That's about over 2 months. A few trades that did more damage than what they should have done to the account. So if we just make sure we're avoiding that, avoiding those outlier trades that are going to do irreparable damage to the account, I think we're going to be good. $20 to $50 days. Yeah, $20, $50 days with no big red days. That'll be good. I am going to try very hard to focus on that. Let me do the math here. If we average, at the minimum, like you said, Kayvon, $20 times 20 trading days, $400 in a month. If we do 30, it's going to be $600. If we do 40, that's $800. So let's just kind of like average that out. Let's have like a $700-$800 month on the small account. Which all blue skies ahead at that point. I mean, if I getting back up there, not so worried about the fees, backs against the wall right now. I'm trying my hardest not to have to. I really don't want to have to fund anymore in here. We'll see. You guys are gonna see it live, so I'm not gonna swing for the fences for a home run trade. I'll tell you guys that right now. I ain't doing that. What I'm gonna do is focus on consistency, taking the higher probability setups, letting the winners run, cutting the losers quick, leaving leftovers to work. Mr. Bad, speaking the truth, small base hits. Yeah, no home runs, not focused on it. Small base hits. Just padding the wallet. It was, you can have such, dude, just like you said, small base hits. Man, you can have like all those base hits all day, just like $15-$20 per trade on 10-15 trades, and have a great day. I mean, you can have a couple $100 day, just taking small profits per trade. I mean, I've noticed that looking at my trades. I'll take a look at the trades on the day, and most of them are small, but then the whole day realized P&L will be pretty good. Hey, Michael David in the building, man. Been around for a little while. How's your small account going? Michael David was hitting green day after green day on his small account for a good while. How's that going? Yeah, guys, what are we supposed to do in the meantime until Monday? This is weekends are awful. Ready to get this party started on Monday. I'm itching. But did most of you guys, how are your accounts going? Did most of you end the week on a green note? You guys trending in the right direction? Talk about your successes and struggles. We're all down to learn from each other in here. EOSE right up at resistance. See, I can't stop myself. I'm the ticker master, chart master 5000. I'm just always flipping through tickers. EOSE at the level of resistance. I got a lot on my watch list come Monday. I have to narrow it in a little bit. AMPY Energy Corporation spiked up into after hours. Michael David, whole strategy is based on that on base hits. Nice. Yeah, and you do a great job of that. Yeah, if you're not trying to like swing for the fences, it just creates too much bias when you're swinging for the fences. And Kayvon's P&L has never looked prettier, so he started sizing down, and his is looking prettier. So you start seeing things more objectively, right? It's an important note we need to consider right now. Once you start sizing down, and of course this is relative based on your trading account. If you have a $10,000 account and you're used to trading, 500 shares, go down to a 1 or 200, it's gonna feel different. You're not gonna be happy with sizing down, but what will help you is the fact that you see things more objectively. So if a trade is invalidated, which was the word Coin used last week, if a trade's invalidated, you'll take it off sooner. If you see it working well, you may scale into it. You just, when you're sized at a point where your emotions are hardly involved in it, you work it much better. That's what I've noticed. So Michael David, it's going well. Got a 2300, took a number above hits, fell down to 1800 and sitting at 22. Climbing back up. Good. I remember you saying, you commented something along the lines of you were in trader rehab, but now you're out of trader rehab. They need I'm gonna start a Traders Anonymous. Traders Anonymous for us trading alcoholics. No, I just drink on Fridays. Some of these trading days, I do want to drink. Trust me, I do want to drink. Man, that's an important note, guys. That's really important. I think that'll help a lot of newer traders out too, realizing that some of you veterans that have been trading for a while, when you put yourself in traders rehab and you start sizing down a bit, it ultimately is actually good for the account. You're not just doing it to put yourself in timeout. You're doing it so where you're trading less emotionally. Emotions are not good, man. They're not good. Here's something for those of you that are taking notes, which is probably none of you. Write this down. Your trading psychology will break your account before your strategy ever does. Your trading psychology will break your account before your strategy ever does. When you can learn to train your mind to be unaffected by the behavior of the market, the struggle is going to cease to exist. Now, why am I reminded of those things? Well, because of what you guys are saying. When you size down, the struggle seems to not exist as much, right? The struggle doesn't exist as much because there's less emotions involved and there's less of the psychology. The psychology is going to break your account before your strategy ever does. I'll keep saying that. You can only win when your mind is stronger than the emotions. Merc, You can only win when your mind is stronger than your emotions. I've seen this so many times, guys. I'm telling you, we're going to the top, guys. We're going to the top. Join the ride if you want to go up there. A lot of you guys are vet traders. We've been trading for a while. We're not egotistical. You know, that's one thing you got to eliminate. I'm telling you, we're going to the top. There's no doubt about it. If I blow up this account on fees, so be it. I'm funding another one, and I know what I did wrong, and we're going to the top from there. There's no exceptions for me. I'm going to the top, and those that want to go, let's go. And you guys are coming along with, dragging your ass with all the screaming and bitching and crying. You're coming to the top. If you're going to be a part of the green team, the everyday trading team, you're coming to the top. We're going there. Look, I'm fairly humble in life. That sounds even prideful to say. When it comes to trading is one of the only things that maybe I'm not so humble about. I feel like I got it. Like the psychology of it, I've got way over the 10,000 hours of time watching it. I got it. And for those that want to go to the top, we're going. So come along. I've experienced all of these struggles. I've experienced everything. I don't know if there's anything I haven't experienced. I've literally been long on something when the offerings come out. I've blown up accounts, buying high, hoping higher. I've done everything. I've experienced all the pain one can experience. I have succumbed to the numbness of it all. I've been through the trenches. When you think you've gone through it all, get ready, because there's probably something else you're about to go through. But I don't know. I mean, it's up from here, baby. It's up from here. So a bunch of you guys have been through it all as well, with blown up accounts and whatnot. I love that we're in this together. This is a brutal journey. It's a brutal journey. Your emotions are going to be scarred. You're going to be numb to life. Hopefully, you're not starting out with large accounts, because that will... The market tuition you'll pay is a little heftier than... than those who, come from humble beginnings. What's the saying? The stock market makes poor people rich, rich people poor. Now, why is that? Well, the ones that start out with rich uncles, Keith, are you in here? The ones who start out with a lot of money, it ain't good. It ain't good. Everybody's gonna blow up accounts. If you didn't start with a blown up account, let me know. I'm sure it's happened. But for those that start out with a lot of money, dude, it's bad. That's trouble. You're gonna be blowing it up. You cannot grow your accounts without first learning the guidelines and behavioral responses and the guardrails you got to put up, and you got to learn what not to do to find out what to do. If you don't fail, you don't succeed. So, look, now this is turning into like a little inspirational night. What did that quote, Mr. Michael Jordan? Mr. Michael Jordan, what did he say? I posted this in the community tab here recently. He said, look, I've missed the game-winning shot like 100 times. Essentially, he's lost like 1,000 championships. But the reason he's won so much is because he's lost. You're not going to win unless you lose. But you don't have to lose large with trading. You can lose small. And that's something we've been focusing on here tonight. You're going to lose. You're going to lose in trading. It is going to happen. It's inevitable. You're going to have red days. You're going to have red trades. But the point is to not have large red days and red trades. You're going to fail, but you're not going to succeed unless you fail. If you don't involve yourself in the risk of trading, you're never going to reap the favorable outcome of it. You have to involve yourself in the risk, or you're never going to see the favorable outcome of it. Yes, we're very humble here, Kayvon. Thank you for the $1. That will be spent wisely. I will wire that towards my account tomorrow. I will have $1 more in my trading account. Thank you, Kayvon. Hey, Keith is in here. Hey, let's play some trading talk. I just got home from Costco. Keith is he's a day trader delivery guy. He's got like a whole trading station in his car, iPads and computers everywhere. He pretty much lets the Tesla drives itself while he trades. It's a brilliant approach. I mean, think about this. Keith he's a delivery guy, so he's in the passenger seat. The Tesla's delivering the packages itself. He's trading in the passenger seat. He's making money in multiple ways. It's a brilliant business plan. Made 238, but lost 200 day trading. Keith, you lost 200? You traded UPXI and lost 60 the last I heard. Did you seriously go on full tilt? Yeah, you traded UPXI. You didn't recognize the spread on it. And please don't tell me you lost 200. Yeah, we're having fun in here, Keith. Look, we've been having some serious talk, but we have some fun talk too. I mean, for you guys that are going to the top, I mean, it's not going to be, some conversations are not going to be easy. Sometimes we're going to be rough with you. You're going to go in timeout. You're going to go to Traders Anonymous, the equivalent of the Traders AA meeting. Look, AA meetings are brilliant, right? AA meetings are great because what? You got all these people coming together that are extremely vulnerable in their lives. That's essentially what traders need to do. It's the only way to grow. You need traders that like a blow up Traders Anonymous, where everybody comes together that are blowing up. I'm trying to say this with a straight face. I mean, I think it's a brilliant idea. Look, next Friday night, we're going to have like, my thumbnail is going to be this Traders Anonymous, this whole circle of chairs with 20 or 30 traders. And we're just going to talk. We're going to talk blow-ups. That's a brilliant idea, Kevin. I don't have these often. Traders Anonymous, next Friday night. All right. I got it. Okay, so lost on futures, lost on C-Pro. Yeah. Sorry to hear that, Keith. Remain optimistic. See, that's what traders are. We're optimists at heart. Very similar to gamblers, right? Gamblers in the casino every day losing all their money. But they're optimists. You know, most people would say, why are you in the casino? You know, it's a losing proposition. You're like, well, I mean, yeah, but I could hit the grand. See, we're traders. We're optimists. We're like, hey, look, I could take small profits here. That's that Elmo meme I posted said. Or the ticker could 10x. So let's focus on the ticker 10xing. That's what we're going to focus on. But yeah, Keith, so I need you to... Keith is going to start getting into shorting. And I fully welcome him to the dark side. We're essentially the dark side traders. And we're trying to avoid front side, so we sometimes call ourselves the backside boys. We're the backside boys here at Everyday Trading Green Team. We focus on not necessarily getting in to the immediate euphoric move, but what we are focused on is, okay, we have a ticker making a euphoric move up, and what do we like to do? The backside boys, what do we like to do? We don't necessarily want to buy high and hope higher. Okay, we don't do that. That's what amateurs do, avoiding risk entirely. What we do is we see the upside move, the euphoria sets in, and we let the other traders, we let all the gambler traders out there in the world, we let them try to get the front side, and they're eating that part of the move, and then we're going to take a piece of the move, though, some meat off the bone, but we're not necessarily trying to capture at the very top of it. What we're looking for is the euphoria to set in, the high to get set, lower highs to form, descending triangle, squeezing tighter to support. We see the examples of this every single day. Michael David is the dark side of Sith all the way. Yes, absolutely. Or we even focus on sloppy seconds. I don't know if you do this too, David, but let's go live here. Like even this, I mean, I would have avoided this trade anyways, but a lot of tickers do this right here. Well, where they'll do a sloppy seconds move. They'll hit a high, and rather than us trying to short that front side move, we wait for a sloppy seconds, essentially like a double top. But we see those kind of moves nearly every single day. They're beautiful. Double tops, descending triangles. You can let the pattern form, right? You don't have to let the FOMO trade. Fear of missing out. You can wait for the pattern to develop, and then you have a clearly defined risk, which, I know newer traders don't like to focus risk. They like to focus reward. It's kind of like the gambling, right? It's like spinning the wheel. What's one thing that separates trading from gambling, from like slot machines, for instance? Well, slot machines, you involve your risk before you spin the wheel. In trading, you see the pattern develop before you even put your money into the machine of the market. It's beautiful. You see the pattern develop, and then you say, okay, let me apply my risk, and you involve a certain amount to that trade, to that hand, to that pocket pair ace setup. It's a beautiful thing. Oh, Kayvon, did I say thank you? Thank you for that $1. I may have already said that. I'll wire it to my account. Can you replay a trading day on TOS? I don't know. I haven't done it before. I don't know. I'm not aware. God. My ADHD is kicking in. What the heck was I just talking about? But look at this OLB even, for instance. OLB, beautiful sloppy seconds move. I love when these tickers have pre-market after-hour resistance up here in like the 2 to 220 range. So we popped up there, gave a sloppy seconds move again. So many sloppy seconds. So many sloppy second moves. And double elevator down, dude. That's why I love shorting the sloppy seconds. Because you have clear defined risk. Oh, that's what I was talking about. Okay, important. Those who are still in here, stay with me just for a second. You guys, I know whatever you're doing tonight, hanging out with your spouses, going to bed. If the wives are hanging out, I don't know. If I'm hanging out with you and your spouse in bed right now, just both of you listen. You have got to have a favorable risk-reward outcome. This is what a lot of newer traders, they don't see. They just don't focus on this at all. So it's not sexy. Guys, it's not sexy talk. It's profitable talk. Not popular talk. It's profitable talk. So, A, you have to have your edge, right? I kind of assume traders have that. Maybe I shouldn't assume that. But let's say you take your signal, you have your edge. B, it needs to be a favorable outcome. So, OLB, for instance, it needs to be favorable risk-reward outcome. What does that mean? It means if you look at this, what's the risk? What is the inherent risk when you enter this trade on this sloppy seconds move? OLB, right back up to the highs. Well, for me, it would have been break over the high a day. So probably would have had like a 215 stop. Give it a little wiggle room. All right, so 205, you're getting in back on that pop over the whole dollar, and you're risking the previous high a day, knowing that here's how my mind works here. My mind sees all this after hours pre-market resistance where a lot of longs are involved in this ticker already, and they're looking for an exit. All right. What does that mean? It means that the long bias traders are in this already and here recently, like this morning in pre-market after hours, or even the last few days, even if a ticker has made a move up. Inevitably, you're going to have long bias traders that are trapped, that are bagging it. We call them baggies. Baggies that are holding and hoping for the ticker to curl back around. So very clear, defined risk on that. And what's the reward? Well, look, $2 entry. Let's just say $2 entry. High day, like 210 risk. So 10-cent risk. Drop down to 170. 30-cent reward. That's a 3-to-1. 3-to-1 risk reward. Now that's what we're looking for. Looking for those favorable risk reward outcomes where you have clearly defined risk and a favorable reward to them. And so not just edge. There's so much more to it, guys. There's so much more to it than just the edge as far as the entry goes. It's not just the entry. It's like there's an edge with the exit too. There's an edge with the sizing. There's a lot to trading, guys. There's a lot to trading. Like, you got to know when to size down. Like, is this a very low float ticker that maybe should not have inherently as much risk as some of the other trades that I take? So maybe it is a certain edge. Maybe it's a good hand to get involved with, but maybe it's not one to involve yourself entirely with the same level of risk that you would on a different hand. There's a lot to trading. There is a lot to it. There's a lot of different ways of looking at it. And then, like, the exit is almost more important than the entry. That's something I realized way later in the game. The entry is one thing, but that's not so important, because if you're not letting your winners run and you're letting your losers run, like I did so often, that's awful for you. That's very terrible. What you need to do is, which I do, I try to focus on a lot for myself because of the fears I struggle with. It's 4 trading fears. We can go over those if you want to. But my trading fears are fear of being wrong and fear of being red. So the implications that has on my account are I'll take things off early. So what I try to do is let half the position ride, take half off, let the other half work. It worked very well on OMEX today. Took 10 off, then took 20 off. So I let that ride out. It's not just about the entry. The entry is just a very small part of it. The exit is almost equally or more important than the entry. Probably more important, I would say. I don't know if you guys would say the same thing, but the exit maybe even far more important. The edge, as far as that goes. Exit is very, very important. It's crucial to let those run. Keith, changing your girlfriend's oil. Nice. Nice. Yeah, I cannot. That's one thing I haven't done in forever, is take the car to get the oil change. I just do that on my own. It takes 5 minutes, and I put the best oil I can find in it, and it still costs me cheaper, you know. They probably put the worst oil in it at the freaking shop, and you're paying more. So I buy the best I can get and put it in myself too. Kayvon, the goal for you is to get Kayvon's goal is to get the meat. Well, I hear Arby's has the meats. Get the meat of the move. Yeah. So not looking for the entirety of the move, Kayvon's saying. He's looking for just the package. He's just looking for that meat. That USDA grass-fed meat. That's what Kayvon's looking for. Keith, I change 2 oil changes every month. All the delivering. Oh my gosh, yeah, that's a lot of driving you do. And you're driving your own car. So 2 oil changes every month. That's a lot. You're putting some miles on that thing. And Kayvon's looking for backside too. Yeah. Same. Yeah, that's very good points. Oh, you both deliver. All right. That's cool. Keith and his girlfriend both deliver. All right. That's a good gig with trading. Trying to find the time to deliver and trade as well. Doing both of them. I like it. Getting a life set up for the both of them. That's what I did too. In college, I discovered trading, and in what was that, 2015 or 16, and I started providing videography services on the weekend. So I was like, which I still do a lot of, that today, just doing work on the weekends, but focusing on trading on the weekdays. Dude, let's get the no tax on tips, man. You'll be killing it. You made $49,000 on Instacart last year. You'll be killing it. Dude, that's the way to go. Not having like a boss telling you what to do. Just chill. Just driving, listening to the radio. Or listening to my dumb ass on YouTube. Whatever you do. Yeah, Keith, I'm gainfully unemployed. Yeah, I've been doing videography work for a while. Long time. Not too long, I guess. I don't know what. Probably started maybe 12 years. Some would say that's a long time. Drive and smoke. Oh, Keith is driving and smoking. I won't ask what you're smoking. I got an idea though. I got an inclination. But traders, anything else you guys want me to go over? We went over a lot of good stuff tonight. Focus on mastering yourself, not the market. Focus on mastering yourself, not the market. And I think we were going over this morning too, but focus on protecting the downside, and then the upside will take care of itself. So the best offense is defense, as the basketball coach used to say. The best offense is defense. So focus on that. The accounts will take care of themselves if we focus on that downside. That's too funny. Yeah, it's about 11 though. I'm gonna start wrapping it up here. Any questions at all before we get on out of here? Keith, I'm only shorting this year. Last year I went long, lost my ass. Yeah. The longs are awful, man. They're just not. They're not my thing. Just react. Focus on reacting, not necessarily predicting. React to the moves. I know I can teach this stuff. I have endless people telling me they're very green on their accounts listening to my advice, but I need to listen to my freaking self. That's what I need to do. Thank you, David. Great advice. Have a good night. David, keep the green account going. Stay disciplined. Next Friday, we're going to have a Traders Rehab Friday night. Traders Anonymous. Next Friday will be fun. The Traders Anonymous group. You were up a lot, shorting, swinging 1,000 shares. Yeah, try to keep it like, you know, what you would trade with size-wise on a live account. And taking the same signals, you know. Try to keep it kind of similar to what you would do live. You'll figure it out, man. You'll figure it out. The shorting, you know, I will say the shorting's going to be uncomfortable for you when you're starting out with it. I mean, it's even still to this day, like, it's a weird feeling. I'm comfortable but uncomfortable too, because you know you're taking the unpopular opposite approach to the trade. Everybody on Twitter and stock twits and everything would hate on it, right? Taking the short of something that the 90%ers are they're perceiving as going, you know, to infinity, going to the moon, diamond hand style. So yeah, I used to be way more influenced by that kind of stuff than what it deserved. I don't even look at it anymore. Unless I'm trying to, you know, there's 3 types of analysis. Part of it's trader analysis. So, I mean, if there's a ticker that's making a move and I have absolutely no clue why, I mean, it could just be a chat room pump. But sometimes I'll surf the Twitter feed and be like, what's going on here? You guys know something I don't? China making a deal with the United States? What's going on here? And that happened the other day, dude. Freaking Congress getting all involved and buying the whole market up. Insider trading. It's ridiculous. We work our asses off to grow our small accounts, and Congress has this insider news that Trump's having a good meeting with China, and so the whole market is just trending up all day the other day, and everybody's completely clueless about what's going on until end of day. Aggravating. 'Tis aggravating. But that's Kevin for congressman. I'll be the first YouTube live day trader, congressman of NC. Be giving you guys all the details. But yeah, I'm about to Keith, you've been outside changing the oil and having me up on your phone or on your whole day trading setup in your car. I'm going to wrap it up here in a few minutes, guys. Let me know if there's any additional questions. It's been a good Friday night live stream. Pretty good turnout. That's right. So it's 8 o'clock over there. I used to say years ago, I'm gonna trade until my clock stops Still, the heart doesn't pump anymore. Can you imagine having the Avery Day Trading YouTube channel where I got like dementia and some nursing home trading? Dude, look. That's all I need. That's all I need to be happy, man. I mean, if I'm in a nursing home and I got my day trading station, I'm happy. If we're with the crew. Oh, Keith, that's loyalty right here. I appreciate that. I'll wrap up here in just a second so you can get to work on that. Yeah, AI coming for all of us. Yeah. The world is looking interesting in the coming years. Will anybody have a job? You know, it's not sure how things are going to look. I'm not even sure, Keith, in China if you'd have a job. I mean, I think in China, aren't they like delivering packages and groceries and stuff via drones? I mean, every job's getting taken. So, universal basic income on the way. That's how I see it. I don't see how people are going to survive. There's just not going to be enough jobs. What does this have to do with trading? I mean, maybe it has a lot to do with trading. We're probably not going to be trading. Nah, I don't know. I can't. I gotta be trading. I can't not trade. It's in my nature. We'll figure it out. We'll have to figure it out. Yeah, guys, I think that's going to wrap up the Friday night live stream. This was a good time. Next week we'll do our Traders Anonymous and go from there. I'm looking for a very green week. Next week. Very green. Consistently green. No home runs next week. We're just going to stay consistently green. Rodriguez in the building. We're just now signing out, man. Go back and watch the live stream. It was a good time. Thanks for jumping in here, though. It was a good time. We went over a lot of good stuff as far as the small account goes and what we're going to be focusing on from here going forward. And a lot of good tips and tricks for your small accounts. Yeah, any questions before we wrap it up? I just got rid of my charts. AMD, though, I mean, AMD and NVIDIA have both been snapping, right? What's AMD been doing? Yeah, AMD's a good swing, in my opinion. I would say she's a good swing. Yep, Keith, we're gonna do that. We're gonna do that on Monday. We gotta get you shorting. I'm going to short my little heart out next week. Everything's a short. Everything Keith looks at is going to be a short next week. I got to, control myself, too, when I do that, because everything I look at, I'm like, ooh, that's a good short. Ooh, that bull flag's a good short. Everything's a short. So, I can get biased at times, looking at different tickers and saying, hey, that's, well, because I've seen, Mr. Doug pointed out, I don't know if you're in here, Doug, but who read my book, and I mentioned how a bull flag can be a bear flag when the ticker is overbought. Essentially, if a ticker's up 100+%, most of the time I am going to short the breakout on the bull flag, because that's when it's doing the liquidity grab and you're getting that big upper shadow, upper wick, and oftentimes you do get a fake out breakout and you get the capitulation, the elevator down fade. We see that a lot. We do see that a lot with those kind of plays. So I mean, unpopular approach, but yeah, I do like to short bull flag breakouts when the ticker's already up in inefficient amount. Really, I mean, it's up 100, 200, 300%. Keith, you need a lot of trader rehab. Well, next Friday, we're going to do the trader rehab. I'm going to be accumulating some information to go over for next Friday night live stream. We're going to have our talk. We got to have a sitting down, because even the last few weeks, I've witnessed a lot of traders blowing up and seen a lot of players leave the game. We gotta have a sit down. We gotta have a conversation. So that's what we're gonna do next Friday. Have a real time conversation. With you guys, so to help you avoid doing just that. Let's hope none of us need it, though, for next Friday, as Kayvon's saying. Yeah. God, I surely hope not. I really I'm trusting myself, Kayvon. I'm trusting you, too, after today. Not going to marry anything next week. It's conditioning of the mind in the mornings. That's what I go over. I'm like, Kevin, you're taking the trade, you're setting the stop, you're moving on, you're not marrying. It's pretty much that. Just conditioning of the mind in the mornings. Make sure I'm not that's a bad mistake, and I'm prone to making it. So that's why I have to reiterate it. Talking to the mirror here. Safety meeting at last. Yeah, OSHA. Having an OSHA meeting. Bring your hard hats and your safety vests. But yeah, guys, thank you for tuning in. I appreciate you guys. And like I said earlier, we're going to make it to the top. I'm going to make sure you guys see the top. I'm going to work my ass off for it. Regardless of all the bitching I'm going to get from you. The crying, the screaming. We're going to make it to the top. And you're coming. You're coming along for the ride. So thank you guys for being part of the Avery Day Trading crew. The green team is what it is. Wall Street After Hours, Friday night day trading party. Traders, be optimistic. Be optimistic even in the face of adversity. When your account is low, when you're taking bigger L's than you want to, when you're blowing up. Remember what I told you earlier. You're only going to succeed if you fail. That's a part of the formula. It's a part of the formula. You're only going to succeed if you fail. Unfortunately. failure is what's going to be on this ride. But you can control the size of the failure. Let's put it that way. You can control how big the failure is. So that's what we want to focus on going into next week. Let's make sure the red trades are smaller. Green trades are bigger, essentially. Yes, Keith, have a great weekend. Thank you, Father Kevin. Appreciate that. I appreciate that. Thank you, Keith. Good luck changing that oil. And, guys, we'll see you. Have a great weekend.